In the books of uh, Mr. Kamath, they've not given the name of the hotel. In the books of Mr. Kamath, we are going to prepare the trading profit and loss. See here, they've asked you to prepare the trading profit and loss account for the year ended 31st March 1996. Similarly, the balance sheet on the same date. Balance sheet as on 31st March 1996. Okay. So you have the particulars amount. Liability and asset. Okay, let's start posting the items. So we have the first thing is capital 1 lakh. Capital is 1 lakh. Then there is bad debts recovered. Now this is an income that you need to show in the profit and loss account. Okay, I will show it here. By bad debts recovered. I explained this item. There were debts that you provided in the past, but that you considered completely bad. Your debtors wouldn't pay, but suddenly you have recovered some of those debts. So that comes to 100. Then there is banqueting debtors, 4,000. I'll leave some lines for the fixed assets. There's no depreciation here. I think there is an adjustment for debtors, which is, yeah, provision for debtors. There's a provision. So I will have to write this in the inner column. There's RDD here. Repairs and replacements, 1,000. Then there is sales, 1,20,000. This also has an adjustment. $1,20,000. Then there is provision for discount received. Okay, I'll just come back to this a little later. I'll explain why provision for discount received. I'll just come back to this a little later. Furniture 6,000. I won't write that provision also. You'll come to know a little later. Furniture is 6,000. There's no depreciation, so directly in the outer column. Then there is purchase returns 500. So less, I have to write the purchases on before that. Purchase returns 500. Then we have postage and telephone 800. Then there is purchases 60,000. This has a lot of adjustments in this problem. Purchases are 60,000. Then there is wages and salaries 29,500. Leave around 2 lines. Again in a column because there's an adjustment. There are wages in kind. Provision for bad debts 300. So you'll have bad debts here, then provision, there's a new provision also, so I'll leave space for that. Less, this is all RDD, all are provision for bad debts. I'll put it as RDD. It is 300. Then we have drawings, which are 2,500. I'm sorry, I put capital out. It has to come in the inner column because there's an adjustment to it. Then we have creditors 6,000. Again, there's an adjustment here. There are two adjustments. One is that provision for discount received, which is given in the adjustments. Stock 2,000. Now we know that this is opening stock. Stock is 2,000 to opening stock. Cash at bank 21,600. Then there is premises 90,000. Gas and electricity 6,800. To gas and electricity. And bad debts 500. And the last is China, cutlery and linen 2,000. There's no depreciation, so I'll write it directly in the outer column. Coming to the adjustments, stock on 31st March is 2,200. That's closing stock. There's an adjustment here, so I'll leave a line by closing stock 2,200. This also goes in the balance sheet. Then there is invoice for advertising, rupees 350 was due for payment but had not been included. This becomes outstanding advertising. So we don't have advertising here, so I will just show it as two outstanding advertising, which is 350. Second effect in the balance sheet. Next, the estimated cost of staff meals was rupees 500 per month. So I told you we have to show this as sales. Okay, meals to staff, add meals to staff. 500 per month becomes 500 into 12, which is 6,000. Show that. This becomes 6,000. This is 1,26,000. And similarly, meals to staff are treated as wages in kind. Add wages in kind 6,000. Yeah, I think that's it. There's nothing else to be added here. This comes to 35,500. Then we have two purchase invoices amounting to rupees 1,000 and not been entered in the books. The fact that they are not recorded in the books, we call them, we say add unrecorded recorded purchases. Add unrecorded purchases, which is 1,000. Unrecorded purchases, which is 1,000. Okay, and the same thing has to be added to the creditors. Add unrecorded purchases. I can't total it yet because there's some provision for discount received. Next we have now some of you may wonder, though they've said two purchases, I've just taken 1,000. They've said two purchase invoices amounting to rupees 1,000. That means in total they are 1,000. They have not said two purchase invoices of 1,000 each or amounting to 1,000 each. They have said 1,000 each, I would have put it as 2,000. Okay, they said amounting to 1,000. That means both the invoices put together. They can be equal, they may not be equal, but both of them put together comes to 1,000. Provision for bad debts should be made equal to 5% of debtors. So 5% of debtors, this is the new RDD, less new RDD. 5% of debtors would be, the debtors are 4,000, so 5,200. That comes to 3,800. Similarly here we have add new RDD. $200. So we have this calculation ready. 500 plus 200, 700 minus 300 becomes 400. And then it is estimated that cash discount on creditors will amount to rupees 180. Now what is happening here? Now what they're saying is that this year they're going to get a cash discount of 180 from the creditors. Okay. Now if you see this here, we already have a provision for discount received. Now this is the old provision because it's given in the trial balance. It's not a provision that's created this year. Okay, it's an old provision. That means last year they had estimated that this year they would expect a discount of 300, or they would receive a discount for 300 from the creditors. But actually, how much have they received? It is estimated that cash discount on creditors will amount to rupees only 180. They had expected a discount of 300, provision of discount. So that means if they expect a discount of 300, that means you treat it as an income. If you remember in the previous problem, we have shown it like this. I'll just show it here just for you to remember. We have shown as by discount received plus new provision minus add new provision less old provision. Okay, just look at this. Okay, so what is happening is, now think of it as last year. Okay, think of it as last year. This provision for discount received, this provision for discount received last year would have been new provision. This year it's becoming old provision because it's last year. Last year it would have been new provision. That means you were hoping to get a discount of how much? You were hoping of getting a discount of 300. Okay, you were hoping of getting a discount of 300. So you considered it as an income last year. But this year, how much discount did you actually get? you actually got a discount of only 180. So 300 minus 180, 120, which you had considered to come as an income, never happened. You never got that income. Okay, so your old provision is greater, 300 is greater than what you actually received. So what we do in such a case is we say, now we can't show this on the debit side. Okay, forget about this. Okay, even if I say, I'll just show it. You don't write. If you're solving the problem with me, don't write it down. Old provision, as we know, is 300. Correct? Old provision, as we know, is 300. And they are estimating that the discount received this year, it is estimated that cash discount on creditors will amount to rupees 180. They are estimating that they are going to receive, or you can say outstanding discount that they are going to receive is 180. Now, if I try to do this discount received, there's no new provision. Minus old provision, what I will get a minus figure here. Why I will get a minus figure? Because I expected more, but I've got less than that. So what I do in such a case is, I don't show it this way. I say to provision for discount received written back. To provision for discount received written back. And what do I get? 300 minus 180. 300 minus 180. So actually 120, which I had considered to come as an income, I have not got. So this I'm just keeping here just to show you, okay? I'm not going to consider this as part of the total. I'm not going to take this as part of the total. I've just done this for you to understand. So that's why I didn't want to discuss it earlier, because it would have kind of created a confusion if I had spoken about this earlier. So this 300 comes only once. This discount received in the adjustments. It is estimated that cash discount on creditors will amount to rupees 180. They have not received it, but they are hoping to receive it. So it's outstanding. So still this one we can take. So from the creditors, I'm going to say less discount received or receivable. Discount received or receivable, which is 180. Okay, what is the meaning of this? The creditors are, you're expecting to get a discount of 180 from your creditors. So 6,000. Now, by chance you don't get this, again you'll have to write it back like this. By chance you don't get this. Okay, by chance you don't get this. Anyone has any questions with regard to this? Please, this is not, in the sense you are not supposed to show it in the problem. I've just done it and I've put it in red. Just for you to understand it. Otherwise, you may wonder why I've taken discount received this way. This is the problem. Okay. Any questions with regard to it? Any questions? Okay, let's do the last one, and then if you have any questions, you can ask me. Caterer estimates that rupees 3,000 included in the purchases represents consumption by himself and his family. So I'm going to say here less drawings, that is 3,000. So this comes to 60,000. 61,000 minus 3,000 will be 58,000. 57,500. There are all the adjustments that comes to 57,500, and the same thing has to be added to drawings here, plus 3,000, that comes to 5,500. Okay, so that's it. We just need to do the total. So this will be the total here will be 1,26,000 plus 2,200 will be 1,28,200. To gross profit, that comes to 33,200. The gross profit is 33,200. Bring down the gross profit. Yeah, I write this down. Gross profit should always be the first item. To gross profit carried down by gross profit brought down. Please don't take this in the total. Okay, I've just written this to explain it to you. This is only for explanation. Please don't consider this as part of the total. So this comes to 33,300. 33,300 and to net profit will be minus 1,800 minus. Sorry, I think I've got this wrong. This figure, I've, this is not 300, this is 200. Okay, I made a mistake. This is not 300, this is 200. It still doesn't change anything. This is 200. This is 20. This is 200. It's not 300, it's 200. And this is 20. So the net profit is 23,930. So we add this here. Add net profit. Get this comes to 1 lakh plus 1 lakh minus 5,500 comes to 118,430. 118,430, and the balance sheet I think tallies. This comes to 125,600. 125,600.